Successful traders are not emotionally driven gamblers going all in when they get a wild hunch. They have a specific trading methodology, which they trust and follow on every trade, regardless of the outcome of the most recent trade. Even following the best system in the world still makes you a gambler if you don't practice proper risk management. All the effort to find great setups and execute trades flawlessly is wasted if you allow fear or greed to influence or change the amount of your portfolio risked on each trade. Because markets are random, the results of individual trades cannot be predicted with any sort of accuracy. But the results of many trades can be predicted with great accuracy, unless each trade carries varied risk from other trades. For example, if one trade represents a portfolio risk 5 times higher than other trades, the outcome of that single trade creates an unpredictable impact on your portfolio, which turns you into a gambler. Option pricing can experience wild swings over short periods of time. As they are also leveraged, these price swings can have a significant impact on a portfolio's overall value. Without proper care, an investor may begin to overweight the risk between trades and trade strategies. A good rule of thumb is to limit the risk of each trade to just 1%-3% of the overall portfolio. When buying stock, losses are limited through the use of stop orders. When buying options, the trader limits the risk by only spending 1%-3% of total portfolio value on each trade. So if a person had $10,000 to trade, the total amount of premium paid would be limited to $100, $300, and the number of contracts purchased would be limited by the amount risked. Investors who commit to this plan limit impulsive decisions, avoid the unpredictable portfolio impact of varied amounts at risk, and create a system of long-term financial success in options trading. In general, option buyers should consider risking an amount closer to 1% of their account, while option sellers might consider containing risk to as much as 3% of their account, but no more if possible, in the event of a worst-case scenario loss. Email us with any questions.